Welcome. This is the Roundtable. Our guest today is Jerry Furst. We're going to be going over some pre-election things that Jerry has been teaching now, and he has a webinar. I'm sorry, he has a meeting that he ends up doing in South Florida. He did it last week. He's been kind enough to be able to take the presentation and show us today. But before we get started, a quick disclaimer: Capital Discussion is not a broker, dealer, or advisor. The presentation that you're about to see is for educational purposes only. We don't know your situation. We have no way of knowing your risk. The risk of losing money when you trade options is significant. We're not making any trade recommendations. Before you make any trades, you should end up understanding all of the risks that you're about to undertake. Hypothetical, computer simulated trades that we discuss are believed to be accurate, but due to things such as slippage, commissions, and liquidity, your results will vary. And Jerry, with that, I can end up giving you the ball if you'd like to get started.
Okay, very good.
Okay.
Welcome, everybody. I will go ahead and start the share. Okay, tell me if you've got the screen. Does everybody see this slide where it's got the discussion of the election? No?
I don't see it yet, Jerry.
Okay, share my screen.
Okay, it's coming up now. Yep, we're good.
All right, very good. So I do have option view in the background. If we have time, we'll only have an hour here, but you'll see a slide. This is a.
That's what we see. We see option view.
Okay. I want to get my taskbar out of the way. All right. The dogs are barking. All right, everybody, welcome. My name is Jerry Furst, founder and director of Investors Education Network, and also would be a presenter for over a year and a half, 2 years on capital discussions. Probably going to get started with another group. Keep posted for that coming up in the future. Today's topic is the election of 2016. How do you trade it? I did this live presentation on Tuesday, exactly 1 week before the, quote, most unusual election ever. And want to try and keep it on a political finance perspective, not really so much about, is it about Trump or Hillary or whoever, but what about the sectors, the ETFs, the indexes, currencies, option strategies? I know that most people on capital discussions are focused on the primary indexes such as the Russell and the SPX, etc. But in my opinion, and again, thanks for the disclaimer, Jim, the concept is that you never want to put all your eggs in one basket. So we would like to think that whether you're doing the weird order trade or the road trip trade, that's only a percentage, and preferably, in my opinion, 10% or less of your portfolio goes into one specific trade. It's what I do. I coach and mentor people privately as far as trying to keep them on track. I used to work at IBM, as Jim did, and they had a moniker called Think. And there's a guy that comes to my meetings. He actually works on Watson's. He's flown up to White Plains, and they're working on cancer research and things like that. And he's very interested in the financial markets as well. And the whole idea here is, what are our opportunities? What is the volatility that could and most likely be showing up within the next few days? The election is supposed to be on Tuesday. We're supposed to have a decision by Wednesday. And between Wednesday and, was it January, I forget what the day is exactly, is it January 20th? Between the election and inauguration, there's a lot of things that can happen. And without going into the geopolitical risks in detail, there's a lot of things that are happening. This is a screenshot of my option view tag that I put together. You can go back and watch the recording in the library later or grab a screenshot, and you can see that these are some symbols that I talked about at my presentation. And let's run through it real quick. Briefly, my history, used to work at IBM, Sports Authority headquarters, Office Depot headquarters, Andrix Pharmaceutical headquarters, and I'm also a licensed insurance agent, but I don't really sell. And I've always been a trader ever since I was a kid growing up in New York, going to the floor of the exchange. I was always enamored with the markets. And so just to let you know, this is what I do. It's allowed me to go and I spend my time and money as an educator getting in front of people such as Ben Bernanke and the deputy director of the IMF and even the president of the U.S. Chamber of Commerce. And this is me at the Federal Reserve Room, probably the most important room in the world, where they've determined interest rates. And I firmly believe that the people who sit in this room are determining a lot of aspects of our lives, and it's more than a photo op. Again, Jim and everybody saying, this is strictly for educational purposes, and I want to go on record that back in June of 2015, I went ahead and quoted that most likely Trump would win the primaries and possibly the actual election. And back at that time, I was saying that John Kerry would end up coming in place of Hillary or whoever else would go in. And that prediction is still in play. And I've done webinars here on Capital Discussions where I talked about that. So anyway, what is definitely in play? Okay, other than the indexes, Mexico, whoever wins, one way or the other, is definitely in play. You can take a look at the dollar Mexican peso. It's in what we call a parabolic pattern, going straight up. And we don't know how high it's going to go up. Typically, these parabolic patterns, once they break out of a base, they go ahead and consolidate and then continue to break higher and higher, where people think it can't possibly, oil couldn't possibly go to $200. Silver couldn't possibly go to $100. And then eventually when they break hard. Currencies as well work similarly. These charts here, I use multiple time frames, monthly, weekly, daily, and you can see the parabolicness of that. So for those, I know I used to teach and trade currencies for several years, and so you can use the currency markets through options on ETFs, which are much safer than Forex brokers, in my opinion. One of my teachers, coaches, mentors was Martin Pring, lives over in Sarasota, and he's got a book, Martin Pring, on price patterns, and I give him the credit here of helping me get involved with price chart patterns. And so it's interesting to just note all the time that we have short-term, intermediate, and long-term trends. So the idea here is what's in play. And it doesn't matter whether it's the Russell, the SPX, oil, gold, everything. Whenever somebody comes to me, what's the market going to do? I always ask them, what market? Okay, because I have one friend of mine, he trades oil, and that's really all he trades. He'll dabble with some gold contracts. He could care less about the indexes. He could care less about IBM. Okay, so what I do when I talk to people live in South Florida at my meetings, they could be absolute beginners to extremely advanced traders. And so it's very frustrating and difficult sometimes to help talk to everybody. So stay tuned to this space on Capital Discussions, as I'm going to settle into most likely a more advanced options and option view training and options focused. And I'm going to probably just stay tuned through Jim and the good work that Tom does. So sectors, real quick, there's a website that I like to point people to, is finviz.com, and you can go up to the top where it says groups on the menu bar, and you can see the sectors, and you see performance of 1 day, 1 week, 1 month, etc. And you can see how healthcare has been doing extremely bad, and that's not a coincidence. I always put up this chart. One of the things that I occasionally, 2 or 3 times a year, I used to teach a course on technical analysis and charting, might offer that through Capital Discussions. But what I always say is I'm 80% technical, such as Fibonacci's, chart patterns, support and resistance. The bottom, you have to calculate your risk reward, patience, and practice psychology. But in this case, I always tell people that I'm fundamentally exponentially weighted at the right side of the chart. And so at this point in time, the election is exponentially weighted on top of all the technicals when it comes to investing and trading. So I always ask people at all my meetings, where are you on this cycle? Are you optimistic, euphoric, despondency, depression? And typically you can tell. You can tell when people are in the accumulation and euphoric stage. That's typically when stocks such as Facebook and Google split and the institutions are distributing their shares to the general public. So again, think, what are our opportunities? What's the volatility? What are the targets that Clinton, if she wins, are likely to go up or down or have volatility? What are the targets and symbols or sectors if Trump wins? And what are the unexpected? Because that's why we have, with options, tail risk. One of the greatest things, the reasons why options were created was to protect against tail risk. 2, 3, 4 standard deviations out. Here's a great website for those of you who do want to get involved, but more in a basket type thing. ETFDB.com is a great site where you can go ahead and do research. In this case, let's say for Mexican ETFs.
Jerry, one of the people asked if you could end up going into presentation mode so we could see just the current slide, so it would be bigger.
Okay, good. Thank you. All right, is that you got it?
Yes.
Okay, good. Yeah, thank you. I should have done that from the beginning. All right. So here's the ETFDB.com. Again, if you want to go back and watch the recording in the library or on YouTube, Tom does a great job of getting that put together. So I'm not going to go through these independently. We don't have enough time. But the one thing that I always want to point out to people, especially newbies, is the volume. I don't care whether you're investing and trading in oil, gold, real estate, or beanie babies. You need volume, okay? Take a look at the volume, and I sorted this on volume, okay? The only ETF I would play with Mexico is this one right here, and it's not a recommendation, just my educational observation to you, that EWW has volume, okay? And then what I do is I'll go out to Option View. And let me just pull that up real quick. Okay, I've got does everybody, Jim, do you see my option view screen?
Sorry, I was on mute, yes.
Okay, so here on option view, this is a tab I have on the bottom that I put together. You can see EWW, it's trading, it's up 1.8% today. And you can see that, DVO, I always get that. Is it daily volume of options or dollar volume of options? I always get it confused. But all I do is I just look to see if it's got a K at the end of it, I'm happy. If it's got 4 digits or more, I'm happy. If it's only got 4 or less, I ain't working with it. So this is one of my key fields that I always look at when I'm looking to invest and trade in anything, volume. So you can see here, here's the British pound, FXB. We'll talk about Brexit in a second. What about China, FXI? Okay, lots of volume as far as at least options. For some reason, I'm not sure option view is frozen. It's not moving here. There it goes. But anyway, back to the PowerPoint. Something else that a lot of people may or may not be into is bonds. Some people believe we're in a huge bond bubble, bond markets, and so you can trade those through the ETFs. And so you got TBT, TTT, UST, average volume, and then you go ahead and you take a look and see what options might be available if you want to invest and trade with options on the bond market. So again, etfdb.com. All right, so here's one example that I put up Tuesday night. And at the time, you can see in BackTrader, because I was doing it at night, at 3:30 on Tuesday, November 1st, we had gold. Let's take a look. Here's a chart of gold right here. Somebody was asking about it. There's a Fibonacci. You can't see it goes off the edge of this the left edge, but you can see the peak up here. I drew the Fibonacci kind of up to the top. I didn't do it to the extreme. It was done quickly, haphazardly at the meeting. Bottom line is that we have a good 38.2 resistance level at 130, and we have a support level of about 114, 112 on the GLD ETF. So resistance at 130, support at 118, which are these moving averages right here. So what I did was go ahead and quickly scanned option view and looking to sell the 130 call, which has about 46 days out. My legend is right here. This is the bid and the ask right here. Whoops. The bid is 110 by 111, so it's a 1 cent spread. Okay. We have 122,000 open contracts. Okay. So we got tons of volume. It's trading for $1.10. And the next one out is the quarterly. You can't see the column header up here, but this is a quarterly. And so if you were to sell this for $1.10, buy this for $1.30, going to cost you 20 cents or so. And here's the risk reward in the side by side. And here is the just the analysis tab on option view by itself, and you can see the break-even points are between 119 and 136. If I pull up GLD right now, you can see we're at 124. This is live right here, and here's the live chart. So, so this is still in play. If I had time, I'd go through all the charts and technicals. But right now, we don't have time for all of that. Any questions showing up on the screen?
No, but the one that was obvious that I guess a lot of folks would have been the challenge with something like this. How would the volatility crush after the election end up hurting or helping a position like this?
Okay, great question. Okay. Before, during, and after the election, volatility crush. My opinion is that if you think the election's over on November 9th, you're not thinking. I'm on record with that. The volatility is going to continue through and into February. GLD is a very good example of what I like to trade because it's a currency. So we're not talking about a volatility crush on something such as the SPX or the Russell or a stock like Netflix.
You kind of are. Volatility on the 30-day has gone from 12 up to almost 19, okay, in the last 2 weeks.
Correct. And I saw your presentation a few days ago, and my opinion, okay, and that's why I'm here as a contrary presenter. You can listen to me now and believe me later. My opinion is that those skew graphs are going to change because the people and the general public think that the volatility is going to be over November 9th or through December. My opinion, which is strictly for me, is that the volatility is going to continue. This ain't over. It ain't over. Let's talk briefly about the election, taking the pro and cons of Trump and Hillary out of it, okay? Whether Hillary makes it through the election, okay, there is an investigation going on. These are facts. Whether she wins or not is going to affect the markets because she's supposedly in Wall Street's pocket, blah, blah, all right? If Trump wins or loses, his supporters are not going away. And, I mean, all I'm trying to do is talk about the facts of the news. Uh, this didn't have to happen. We could have had, before the Democratic Convention, a decision by the FBI, Department of Justice, to either completely shut down any questions. Obama, right this second, could go ahead and give a blanket pardon in advance. Anything that she's ever done, no problem. That would be a volatility crush. Barring a presidential pardon, my expectation is that the volatility crushes that you're seeing on the charts don't reflect my Jerry Furst's opinion. You can bring me back later and say, you were right, you're incredible, or you can go ahead and ban me from ever speaking again. And that's what makes a market. That's what makes a market. So anyway, just take a quick look at this, risk reward graph on GLD. Okay, the break even on it's trading at 124. The ETF, the GLD trades about 1/10 the price of the future contract on gold, and you've got a 77% break even, according to, or 79% break even based on Option View's projections on this. You've got, kind of like your flat line over here, and that expiration at 46 days out, a $240 bet could net you $1,700. That's strictly Option View's, analysis. So what if it's only November 24th, Thanksgiving? If we hit 130, the peak, you'd go ahead and have 103% gain. So again, let me go back to what I said in the beginning. You don't put all your eggs in one basket. So if you put, 10% of 10% of your active trading account into stock symbols or something like this, $250, you get 100%, so you can buy yourself a good dinner somewhere, If you go ahead and hold out to expiration, December 17th, and if it peaks at 130, you've got a potential 764% gain of $1,800 with the princely admission fee of $238. So, so there's something to look at, which is kind of neutral. Gold, like I said, is a currency. I can fly anywhere in the world with some gold coins in my pocket or gold around my neck, and I'll be able to get myself a meal, a bed, and anything else I want. Not so much with I've got some old Italian lira, and I've got some traveler's checks for the French franc that I still have to convert by mailing in those traveler's checks, something some of you may have laying around somewhere. So here, Fed, I had somebody at my crowd saying, what's the Fed going to do tomorrow, And I told them they're backed in the corner. We have $20 trillion of debt. If you have $20 trillion of debt, are you going to ask the bank to raise your interest rate? No, they're stuck. No matter how they try to move, they're stuck in a corner. And so the day that they raise anything more than a quarter point, that's when you're going to see some huge volatility. This is from Merrill Lynch, Bank of America. This is the merry-go-round. The Fed threatens a rate hike, the markets go down. The Fed delays the hike, the markets come back up. And so anybody who's interested in interest rates, that's all you need to know. Here's a quick chart from 1990 to 2009. You can see all of these banks that used to be on your corner next to your gas station. And you can see in 1999, before Y2K was going to crash the world, how they consolidated to Citigroup, Washington Mutual, Bank One, Chase Manhattan, Wells Fargo, Wachovia Money, First Union. And here we are 2009, how they've all consolidated down to 5. Citigroup, JP Morgan, Bank of America, Wells Fargo. And too big to fail. This is for those of you who are paying attention to the financial news. Deutsche Bank, if you take a look at their gross derivative exposure, is 42 trillion euros. The European Union's GDP per year is approximately 14.6 trillion euros. The German GDP, and the Germans are always bailing out Greece and now Italy, is 3 trillion. So here from Mr. William Banzai, financial weapons of mass destruction is what Warren Buffett calls derivatives. And we'll see what happens. There's nothing to see here. We'll just go to the next slide. So as far as foundations and experience, for those of you who are here on capital discussions, I'm not sure who's here really for learning how to do it yourself. You want to go out fishing and hunting yourself where there's risk involved, or do you want to get served a fish or a moose dinner? I assume there's probably both, but it does take a lot of time to learn the foundations and the basics, and something that no admission ticket to any trading class will ever get you is experience. I have scores and scores of people who've paid me to learn, but then they've never practiced. Okay, they've never applied. How many people have gone out and bought books on trading and maybe just read a few pages and put it back on the shelf? Okay, so I know that there's a lot of experienced people here on capital discussions, but this is from my live meeting where there are a lot of beginners, and I don't want people. If they want to play tennis and if they want to play golf, and if they don't want to be, taking the time to learn the game, I want to warn them, don't do it. Just find a good financial advisor and a wealth management expert and enjoy the retirement or whatever you got. But if you do want to play the game like I do, or like Jim does, or like Tom does, or Amy, then Capital Discussions is one of your places you can, kind of tune in. Here's from October 17th, about a month ago. The former German central bank planner said that the real danger in finance is that the threat investors and investment groups will be wiped out by wild price swings from an unexpected political shock. Okay, so it's always about fear and greed, risk reward, and so just tread carefully. For those of you who subscribe to Financial Times, here's a quote from Gillian Tett. The markets are not true markets anymore. They're not free markets. I used to go when I was a kid to the New York Stock Exchange, scores of people on the floor. Now it's all computers and high frequency trading. And so it's a great game. It's a great game. It really is. But if you want to be successful and understand that it's a learning curve, go ahead and contact me or get in touch with Tom and Jim and Amy and all the other guys to help you move along the curve. Okay, let me get past this. All right, so I had a little mock vote, and if you guys are interested in knowing who won the mock vote, let me know. Anyway, Trump targets. Okay, here's a question I have on one of my other slides. I've never heard Hillary specifically call one company or industry or sector out, except maybe the healthcare and maybe the pharmaceutical companies. Trump has a huge list of friends and enemies, friends and foes. I saw him in 2007 do a presentation at the Broward County Convention Center at the top of the real estate market, and he told everyone there, it's not the time to buy, it's the time to sell. He also said, if somebody F's me, I F him back harder. And I take him at his word with everything he says. He's truly, in my opinion, transparent. So when he says he wants to deregulate, he hates the news organizations. He's against the AT&T Time Warner merger. He's going to go up against Mexico and China. And he has friends such as Nigel Farage with Brexit, which affects the pound, the euro, the yen. These are actionable items that you can go ahead and start scanning for. One of the things he also calls out is the New York Times. He says they're going bankrupt. Okay? Now, take a look at this chart. The trend is your friend, right? It's up to you to decide whether or not the volatility, if Trump wins or loses, what do you think? If you want my opinion, you'll have to contact me directly and we can talk about coaching and mentoring. But I have no clue, as Jim said, what your personal risk tolerance or skill level is to manage your own trades. One of the other things that you should look at is conglomerates. Over the years, we've had more and more consolidation, and consolidation ultimately leads to less jobs. Trump hasn't come out and said it outright except a couple of times, and I've watched a lot of his speeches, but he's not in favor of all these big conglomerates and mergers. If you break up these conglomerates, you're going to have a lot more jobs. But even put that on the side, okay, look at these names in the center: Nestle, Coke, Unilever, Danone, Mars, Mondelez, Kellogg's, General Mills. All of these are consumables, okay? I don't think that any of these companies, conglomerates, are going to go out of business anytime soon, unless if, maybe there's some kind of monkey business in the back home office, which could always happen. But for the most part, these are all solid companies that if you're investing in trading for the long term, you could consider. What about the media groups? In 1983, there were over 90% of the U.S. media was owned by 50 companies. In 2012, there's only 6. So take a look at these names. Each of these you can go ahead and take actionable, investment and tradings on, okay? And they have tons of liquidity. Comcast, News Corp, Disney, Viacom, Time Warner, CBS. Take a look at the properties. Again, go back to the library and take a look and, look at the screenshot here, okay? Look at the properties that each one of these conglomerates owns in the media space. I think that Trump is probably going to put somebody into the FTC to look into them. We'll see what happens. If Hillary gets in, the volatility comes out. The AT&T merger. It's already said that the AT&T Time Warner merger, scrutiny on the campaign trail. Okay. Think about breakups, what it would do. It would unwind the efficiencies. You'd have to create, once again, multiple HR departments, shipping departments, purchasing departments. You'll have to have your typing pools again. Commercial real estate. Think, what is Trump into? He's into real estate. He'd love the commercial real estate market to come back. REITs, real estate investment trusts, something to think about. Contingency plans. Oh, Jerry, you got a tinfoil hat on your head. No, I got a whole closet full of tinfoil hats. Okay, what's going to happen if Obama either changes, suspends the election? Suppose Hillary checks herself into the hospital over the weekend, okay, and says that she's, she's giving up. Okay, in such a scenario, bank holidays could go into effect. Okay, so what that would be a 4 or 5 standard deviation temporary, vol crack. Okay. The question there becomes, if you're investing in trading in the short term, how are your options going to be settled if the banks and the markets are closed? And for those of you who don't have the experience, the last time it happened for any length of time was September 11th, 2001, where the markets were closed for 5 days. So it happens a lot more often than you think. So again, my prediction that I put back in June 20th to a guy that he has a lot of followers on Facebook. He was laughing that Trump was going to run. And I just quoted Gandhi. First they ignore you, then they laugh at you, then they attack you, and then you win. And I also say that Gandhi didn't end up too good. So we'll see what happens. but that's my prediction. This was November 3rd. Okay. Sources claim that there's an avalanche of evidence in the case against Hillary and that barring an obstruction of justice, they would continue to push for indictment. And so you have to put that into your volatility risk. I don't think that shows up in the skews. I really don't. I don't think it shows up in the skew. Deregulation. Think about these agencies: Federal Trade Commission, the FDA, the FCC. I don't know how many of you are cutting the cord, but it's putting extreme pressure on those media conglomerates. Some stock symbols to note: Netflix, Amazon, Yahoo, Twitter. Okay, you want to put on a trade with that? You want to talk to me or Jim or Tom or Amy? What kind of volatility trades could we put on? That's a private discussion. Just always remember, 42.7% of all statistics are made up on the spot. My favorite is 38.2 because it's a Fibonacci number. This is a picture of a 2003 cover of Barron's. Is it time to buy General Electric? Okay, what sector is General Electric in? How is General Electric going to be affected? It's like a lot of people are piling into the Dow 30 components because of their dividends. They're the best bonds around. They print their own currency. Their General Electric has no affiliation to the United States. They will sell anything to anybody, anywhere in the world. And so General Electric, again, one of those conglomerates that pays a dividend. It's kind of like a bond with potential upside appreciation. And some people with lots and lots of money, they just buy the stock all the time they can, and they just collect the dividends, and they enjoy their vacations. Procter & Gamble, here's one of the conglomerates. Look at all these individual names that once upon a time had their own business, their own shipping department, their own manufacturing factory. How many of these could potentially come back onshore? Okay, it's something to think about. Mondelez. Trump used to talk about Oreo cookies all the time. It's interesting, Mondelez, their symbol is actually, it's like a stock chart. It's a conglomerate with Ritz crackers, Nabisco, Chips Ahoy, Triscuits. Again, it's a consumable. Once people decide that they like Nabisco crackers, Ritz crackers, or Trident gum, the odds are that they stick with that brand. These are evergreen type conglomerates, okay? Now, Trump doesn't like the fact that Oreo cookies left for Mexico. And at my live meeting, it was pointed out it's because of the subsidies on sugar, not the subsidies, but the tax penalties on sugar companies such as Coca-Cola. So, I don't know, is Trump going to be able to pull the Oreo cookie factory back from Mexico? I don't know. But Mondelez could be in play. So here's a snapshot of Option View. You can take a look and see my legend here on Option View. If you don't use Option View or OptionNet Explorer, I think those are the two best option analysis softwares out there. Option View has a lot more history. They're now on version 8, and they have a lot more functionality than any of the other softwares that I've seen out there. But anyway, I can configure all of those different parameters, and this is one of my favorites. I have the bid-ask spread, the market price, which is usually in the midpoint, the difference between, because that way I can quickly see. Notice here there's only a 1 cent difference between the bid and the ask. I can quickly see whether or not there's huge spreads or huge differences between the option pricing. The implied volatility at the midpoint, I'm looking at the delta in this case. My open interest, look at the thousands of shares, thousands of contracts open here at the money on Mondelez. And that's going out to January. So it looks like here a nice calendar spread, right? You've got 45, they're trading at 45. You got 10,000 open interest on the Decembers and 11,000 on the Januaries. something to look at maybe. That's one way that you can potentially look for trades, looking at the open interest. Again, you've got capitaldiscussions.com. You can see I've been broadcasting here for a long time. You can click on my name in the library, and you can hit the refresh button. Capital Discussions does have mentoring opportunities with those of us who do present. So talk to Tom or Jim about that if you're interested. And I'm with her. I was talking to Jim before. He was like, "Who is she?" It's like, "This is Tiffany Trump. She's worth a couple of billion probably. I'm making her giggle over here. You don't know where my hand is either, my other one." And anyway, I usually find a way through the back door to try to get in touch with the people high up, whether it's Ben Bernanke or Tiffany Trump. I can whisper in her ear. Anyway, any questions at this point? Any questions?
I think this one came to me. It probably should have come to you. It says, low rates a long time ago past the point of being able to help, and now they're hurting things. Okay, but for savers, depending on an interest rate and income, okay, they're being starved and forced to end up cutting their spending and or save more. Well, the institution's not able to end up meeting their yield goals. I guess it was more of just a comment about how low interest rates, artificially held for a long period of time, end up causing temper tantrums or taper tantrums, I meant.
Sure. And I just got off the phone with you know what? Yahoo's great. Internet's great. I just went out to Yahoo Finance. I wanted to vent some of my frustration to the bank representatives at the executive office of BB&T Bank the other day. I mean, they're charging me $12 for the pleasure of having my checking account for my Investors Education Network business. They are sitting at the window getting 0% interest, and they charge their customers and clients nickel and diming them fees, especially people with the less money people have, the more they charge them fees. And credit, they get it for zero, and they're charging people anywhere from 11 to 24 or more percent interest. And I'm still waiting on a call back from the executive offices, but every once in a while, I like to get, like I said, I'm kind of one of them squeaky wheels that you'd prefer to not have against you. But yeah, the whole concept of 0% interest rates, yes, there's a little known fact that's fallen by the wayside, and if you go out and look at TARP, the TARP program, not TARPs, that was instituted in the middle of the crisis of 2008-2009, it ended with a $15.3 billion profit. They were allocated $750 billion by Congress. They only used 450 of it, and it was paid back at a profit. Whether you love him or hate him, Obama borrowed $1 trillion for shovel-ready jobs that he laughed about later, and we have nothing to show for it. And people say that, the TARP and Obama was left with such a horrible economy. The TARP was necessary at the time to stabilize, because I had clients that were calling me saying they went to their bank, they wanted to pull money out of the bank, and the bank wouldn't give it to them because they didn't have the cash. So they had to stabilize, and I was at the U.S. Reserve, the Federal Reserve in Miami, when a presenter came down. He was the Atlanta Fed chief was there, and it's all a crisis of confidence. When people are confident, they're happy to leave their money in the bank and everything's okay. But if you understand the fractional reserve monetary system, there's only $3 to $5 for every dollar that's been put into the banks for so-called savings. And so an ultimate bank run will ultimately crush the system. So we just have to pretend and extend. And as far as I'm concerned, if you can get a 0% credit card and, have fun, that's my opinion. All right. Any other questions?
That was the only one.
All right. Well, listen, I hope you all enjoyed. There's a lot of time and effort that goes into these presentations, a lot of my years of experience, whether it's with option view, charts, strategies, candlesticks, moving averages, which other ones? Fibonacci's, Carolyn Borodin, one of my teachers, John Carter, Hubert Centers, Steve Nissan, John Bollinger. All of these are people who I've not only bumped elbows with, but had beers and drinks, and I've promoted their courses, taken their courses. John Murphy, I've debated with him about his feelings about price chart patterns, and so I hope that you can appreciate the efforts that your educators go through to bring you the years of education that they have, and then they take their time instead of focusing 100% on their trading. They actually take the time to help teach others so that you might be able to get knowledge and put it to use. And with that, I'll just go ahead and say stay tuned, because it'll be interesting over the next few weeks and months ahead, as this election is not over. No way. Not in my opinion. And there's always another one. There's always another election. As soon as the election's over, after Valentine's Day, they start talking about the next one every 2 years. So stay tuned, and send me your comments and questions, and even ideas if you would like, whether it's a newsletter service, private coaching and mentoring, or training, or option view focus group. Let me know. All right, Jim, thank you very much. Tom, thank you, as always.
Thank you, Jerry. Thank you, everyone.
All right. Thank you. Bye-bye.